Did you know that job openings in April reached an unexpected high of 7.4 million? This surprising data challenges the usual economic expectations and sheds new light on the current state of the labor market. Stay tuned to find out what this means for you, the economy, and the future of employment trends. Welcome to our deep dive into the latest employment data that has taken the economic world by surprise. The Job Openings and Labor Turnover Survey reported an unexpected increase in job openings for April, reaching nearly 7.4 million. This rise of 191,000 from March figures exceeds the predictions set by economic experts and provides a snapshot of a labor market that seems to be holding steady despite prevailing uncertainties. With hiring and layoffs also on the rise and the unemployment rate maintaining a steady figure, we are witnessing an intriguing period of stability in the labor market. As we delve deeper, we'll explore what these numbers mean for employers, workers, and policymakers alike. Additionally, we'll touch on other economic indicators released this month, such as the decline in new orders for manufactured goods and what these might suggest for the economic outlook as businesses navigate the complexities of tariffs and inflation concerns. In this video, we will provide a comprehensive analysis of the latest employment figures, breaking down their significance in three key areas. First, we'll explore why the increase in job openings is a positive signal for the labor market, suggesting that employers are confident enough to expand their workforce despite broader economic challenges. This is particularly notable given the close ratio of available jobs to unemployed workers, which stands at 1.03 to 1, a sign of a competitive job market. Next, we'll discuss the implications of rising hiring and layoffs, with hiring up by 169,000 to 5.6 million and layoffs increasing by 196,000 to 1.79 million. These figures indicate a dynamic labor market where opportunities and challenges coexist. Lastly, we will touch upon the macroeconomic factors at play. While the labor market shows signs of steadiness, other economic indicators, such as the decline in new orders for manufactured goods, point to potential hurdles. With a 3.7% drop from March, this decrease outpaced forecasts and highlights the impact of ongoing economic policies, including tariffs. As Federal Reserve officials closely monitor these changes, the data holds significant implications for future interest rate decisions and economic growth strategies. Join us as we unpack these developments and forecast their potential impact on the economy and job seekers. In April, the U.S. job market experienced a surprising uptick, as indicated by the Job Openings and Labor Turnover Survey, which revealed that available job openings totaled nearly 7.4 million. This represents an increase of 191,000 from March and surpassed the economist's consensus of 7.1 million, according to FactSet. Such figures suggest a relatively steady labor market despite ongoing economic uncertainties. The ratio of available jobs to unemployed workers was 1.03 to 1, nearly unchanged from March, indicating close parity between job opportunities and those seeking employment. Moreover, hiring saw a notable increase, climbing by 169,000 to reach 5.6 million, while layoffs also rose by 196,000 to 1.79 million. The decline in quits, which fell by 150,000 to 3.2 million, highlighted a slight dip in worker confidence regarding their prospects to find new employment, although the overall labor market appears resilient. Jeffrey Roach, the chief economist at LPL Research, noted that patterns in hirings and firings suggest stabilization in the labor market, returning to more normal levels. This assessment comes in the backdrop of the U.S. Bureau of Labor Statistics preparing to release its May non-farm payrolls count. Expectations for job growth are estimated at $125,000, down from April's $177,000, yet still reflecting strength in the labor sector. The unemployment rate is anticipated to hold steady at 4.2%, further reinforcing the labor market's robustness. In other economic developments, the Commerce Department reported a decline in new orders for manufactured goods, dropping 3.7% in April, a sharper fall than the 3.3% predicted by Dow Jones. This decline signals reduced demand following a robust increase of 3.4% in March, which had been driven by businesses accelerating purchases in anticipation of tariffs imposed by then-President Trump. Additionally, shipments of manufactured goods fell by 0.3%, while unfilled orders remained stagnant and inventories decreased slightly by 0.1%. Such data are crucial for Federal Reserve officials as they observe various economic indicators to gauge the broader economic health. Amid these developments, there is concern that tariffs could contribute to rising inflation and hiring slowdowns. However, these fears have yet to manifest in concrete data. Sentiment surveys indicate growing apprehension regarding these economic changes. Raphael Bostic, president of the Atlanta Federal Reserve, remarked that for many sectors, labor markets have not experienced significant shifts. He noted a lack of overwhelming evidence of drastic macroeconomic changes, suggesting a wait-and-see approach to determine future trends. Financial markets widely anticipate that the Federal Reserve will maintain its benchmark borrowing rate within the 4.25% to 4.5% range, a level sustained since December 2024. Market projections suggest a potential interest rate cut could occur by September, with Bostic advocating for potentially only one reduction within the year. These insights underline the complexities and cautious optimism surrounding the U.S. economy as it navigates various challenges and opportunities. Let's wrap up by revisiting the key points of our analysis on the recent employment data release. April saw a surprising jump in job openings to nearly 7.4 million, reflecting a 191,000 increase from March and surpassing expectations. This surge suggests renewed confidence among employers amidst a stable labor market environment. Despite the uptick in layoffs and a slight decline in quits, which dipped by 150,000 to 3.2 million, the overall hiring trend remains positive, rising by 169,000 to reach 5.6 million. These figures paint a picture of a labor market that, while not without its challenges, is maintaining resilience against economic uncertainties. As we consider the broader economic context, the decline in new orders for manufactured goods, down 3.7% from the previous month, serves as a cautious reminder of the complex interactions between trade policies such as tariffs and domestic economic performance. This shift in manufacturing orders, coupled with a modest decrease in shipments and a stable level of unfilled orders, underscores the nuanced economic landscape employers and policymakers are navigating. Federal Reserve officials, including Atlanta Fed President Raphael Bostic, remain vigilant, assessing these data points to inform future interest rate adjustments. Bostic's cautious stance on potential rate cuts, alongside market expectations, indicates a thoughtful approach to sustaining economic growth without exacerbating inflation concerns. As we move forward, these developments will be crucial in shaping the labor market dynamics and overall economic health. In conclusion, the April job openings report reveals a labor market that, despite its complexities, continues to offer opportunities while highlighting areas for strategic policy interventions. If you found this analysis insightful, don't forget to subscribe to our channel for more in-depth economic updates. Hit the like button and share this video with others who are keen to understand employment trends and economic forecasts. Explore our playlists such as Wall Street, Companies, and Investment 101 for more intriguing content. Stay informed, stay ahead.